It's Brian Preston, the money guy.
I'm going to start you off, Brian, with one that's really good that I can't remember we've ever answered.
Uh-oh.
No, it's really good.
Uh-oh.
We've answered it with clients all the time.
Rote memorization doesn't occur from breaking new ground.
That's right. This is from Josh. Josh is a listener on YouTube. He says, hey, what are the boxes that need checked before letting my term life insurance expire? And I'm going to add a little bit, because he mentioned expiration, I'm going to even say, or getting rid of it altogether.
Yeah.
Because I feel like we face that question all the time. We'll have someone who retires and say, hey, I got this term policy. I did what you said, but I'm retired. What should I do?
Well, there's several things to think about with term life insurance. First of all, just the structure of it. Term life insurance is cheap for the term of the insurance because the difference between term versus permanent insurance is that term kind of charges you only the cost of the insurance. They're not really, because once it's over, if you're doing like a 20-year term policy, it's going to be a level term all 20 years. Yep. And then if you want it on year 21, it's going to spike up. Permanent insurance, what it does is it tries to also give you a level policy premium, but they're making you overpay while you're young so that hopefully you build up enough investments and other values so that when you're an older person, all those overpayments while you were young can be used to pay the much higher cost of the insurance. Our thought on towards life insurance is do the term insurance where you're just paying for the cost of insurance, but make sure you get the length of time of coverage long enough to cover you building financial independence. Yep. So there's a box to be checked. That you get the kiddos out of college. So that box is checked. And you're completely out of debt. You want to get that box checked. So those are the three big things. So that's why it's not uncommon that you might want to buy a 20-year or 30-year term. But I have one other caveat to throw in there. I see this with clients all the time. They've had a term insurance policy for 15 years. They've reached a level of financial success. The kids are getting older. Mm-hmm. They're like, do I still want to keep paying this life insurance premium every year when I feel like I can kind of self-insure? Then it becomes a value discussion because I have this discussion all the time too. Is that think about all those commercials that come on and say, we will buy your life insurance policy. If you are a person that you're 15 years into your 20-year term policy, but you think that you're now at the financially secure point, you don't need it, but that premium is only a few $100 a year, but you're getting $1 million or $2 million of coverage, there might be a value play that you just continue to pay the few $100s a year and just let it go away naturally after the term expires. I just hate that, but some of you from a maximizing standpoint, you might go, well, I just want that to come out of my cash flow so I don't have to worry about it. But I don't know that I think it's that easy of a decision.
Yeah, I think it's very case by case because what you would hate, what would be so sad is you have a term year that's 20 years and you paid on it for 16, and then you retire and you're like, I don't need the term anymore, and then something happens in the next 4 years, some freak thing. It's insurance there. You hope you never use it, but maybe the cost is worth it just based on the fact that you're so close to the end of the term. So
I do want to throw one caveat because, I think insurance salesmen think we pick on them sometimes, and I can already hear the echoes of the comments from them right now. So I do want to throw one bit of a carrot or a kernel of something to look for with term. Some people are worried about insurability as you get older because, it's one thing when you buy a policy when you're 25, 30, 35 years old. It's another when you're trying to buy insurance when you're 50, 55 years old because you might have some medical issues or something. You might want to look on a portion of your term policies to see if you can convert it, to see if you have the option to convert it to permanent insurance at some point in the future. And that way, if you ever got yourself in a situation where maybe you're no longer insurable because of a medical condition, the term might have a little additional flexibility. Look, see, I gave a little love to the insurance guys.
So impressed. I would consult a financial professional before making that decision. And likely a financial professional that doesn't benefit if you buy the insurance.
That is a great point. That conflict of interest tends to really jade that decision a lot.